All right, folks, welcome to the stream. If you can hear me fine, you see the picture fine, we're looking at the cues, 3 minutes chart. Let's just begin. No music today. We're just going to dive right into it. Okay, and once again, a reminder, folks, if you're watching from Patreon, all you got to do is just click on the link and you'll be able to chat with us here from your YouTube account. If you can't, because I noticed that there are some problems, just post your questions on the Discord Top Gun channel. I'm going to revisit those questions before the end. And of course, next week we're going to have a private stream. I'm just testing it right now. It requires a few days worth of testing because I don't want to test it when we're doing it live. And then there's a lag in one platform versus the other. So probably next week will be in a private stream for both Patreon and YouTube. And it's going to work out just fine. But let's begin here with the market, folks. As folks in the Top Guns begin to join here, I got good news, I got bad news. For the market, of course. For you, that depends on your positioning. If you have bullish or bearish, I got some good news and bad news for you. I hope that you're looking at my Twitter account because I posted some important things that must be understood. Now, let's begin with the indicators right off the gate. The dollar is absolutely collapsing here. The jolts came out weaker, so we know that the dollar is going down because of expectations of more rate cuts and loosening of the policy because the economy is showing more signs of recession. Is that going to be relevant to the market action right now? No. We already know that we got a double whammy. Manufacturing PMI yesterday, the jolts today. So we know what's going on here. It's going to come down to the psychology. But you have to know that with the dollar going down like this, the question becomes, do you make bets based on the dollar's action today? For example, do you go and buy gold at this point? Do you buy silver? Or do you buy even copper? So you got Freeport got an upgrade today, which is kind of peculiar, right? I mean, you're upgrading copper before a recession. But anyways, before you do that, understand that we have the services PMI coming out tomorrow. And if that comes out hot, because services does a lot better than manufacturing, and that's the majority of the economy. If it comes out good, it might actually move the dollar back up. And whatever you buy in the gold miners today, or the silver, or copper, or any dollar-sensitive asset, might go against you tomorrow. So you have to allow the data to roll in. That's the problem, that in this stage, we're pretty much enslaved to the data. Every time there's a data, we swing based on that particular data, but I'm not going to take any bets based on the dollar reactions today. Now, if you look at the bond yields here, 10-year, it's the same thing. Rolling over because of recession expectations from the jolts and more rate cut expectations. The problem is we have the services PMI, we have the jobs report, so it dropped down here. It solidifies, let's look at the IYR, for example, the dividend-paying names. It's a safe bet either way. The dollar goes down or the dollar goes up because of good news. If bond yields are going down, and if you expect that the services PMI is not going to do anything about it, and the jobs report is not going to do anything about it, then these guys will be the safest bet, which is IYR, the XLU. My 2 cents, they're too exhausted here, and I think we'll get hotter data from services and the jobs number perhaps, which will bring these guys down and actually create more inflows into the guys that got massacred yesterday. But that's just an assumption. I have no evidence that that's going to be the case. But right now, for today's session, you look at Coca-Cola exhausted a little bit. So the dividend-paying stocks, they're okay. But again, I'm not going to make any bets, new bets right now, based on what we see right here or in the dollar, because we have more data coming. So I cannot trust this kind of action. I don't think it's relevant to today's session. Excuse me. Looking at the VIX, the third indicator. Let's move here to the hourly chart. We're about to get 20. I mean, it got way out of whack here overbought. It remains to be seen whether we close below 20 or keep 20. If we close above, I'd be nervous that we have a dead cat rebound on hand, and then down we go again. If we close below 20, and the services PMI comes out good, then we're going to look back at this as, okay, this is the beginning of September hedging activities that caused the VIX to explode higher and push the most owned assets like the Apples and Nvidias down. But now we're on the road of recovery until we see what happens with the jobs data, until we see what happens with the FOMC meeting next week, which, by the way, we'll get the CPI too. So 20 is really important here as a validation. Whether you have to close your puts, for example, book profits, and maybe switch to rebound plays or not, 20 becomes really important. Let's look at the closer time frame here. The 5 is getting a little oversold. So when you look at the time frames, folks, you'll see, for example, the 1 minute was oversold here, but fixed the oversold right away with a little bounce. Then you look at the 3 minutes, was also oversold here, got a little bounce and fixed that. So you look at the 5 minutes now, that's oversold, probably a bigger rebound, which it causes the market to react more negatively. But then at the end of the day, the hourly is the golden rule, really. And right now, it got overbought. I think it can go below 20 today if it wants to. If we see the right circumstances, it is possible. Now, I said that I have good news and I have bad news for you. Let's begin with the good news. So if we look at the NASDAQ 3 minutes chart, we got the jolts and the initial shock. So notice that the buyers stepped in here. Again, could be shorts taking profits, could be dip buyers. For now, we have no validation. Until the VIX drop below 20, then we know that we have both of them showing up, not just the shorts covering. But the bottom line is buyers showed up here. Initial shock of the jolts. Buyers stepped in again. And if you throw stones at the market and it comes back, that's a sign of strength in my book. Now, is it going to be strong enough to close the session in the green or initiate a sustainable rebound? We go back to the morning brief and you look at the NQs. I think the NASDAQ future is more accurate than the actual Qs because it is continuous. And again, it got way oversold. I mean, these readings in the MACD, the hourly, are absolutely insane. We went to below 160, which is way oversold. In any case, we're at the first challenge right now. That's not a big deal, really. Could be a dead cat bounce. But if we get to the second challenge, 19,200, and we see success in closing above, I would assume that the rebound has legs and the upside would be more threatening as we see the services PMI and the jobless data or the jobs report coming out. Don't forget, folks, it is also a shortened trading week. So sure, the algorithms yesterday, they were programmed beforehand that once we enter September, you got to do the hedging. They did that. Are we about to cool off that narrative in the next few days? That's also important. But again, layers of validation. You have to use them. Let's go with the bad news. The bad news is Apple is not looking good. Okay, Apple is a major component. It's not just NVIDIA. I know everybody's talking about NVIDIA, but again, Apple is important and it's just been flushing down. And you got to remember that Apple is over-owned. So part of the hedging is reducing the allocation to Apple by asset managers. And I expect to see more of that. And just Apple going down can drag the indices down regardless of what the rest do. So that's bad news. And bad news number two, whatever drop we got in the VIX so far, I mean, it's still holding 20. We'll see what happens with 20. If we lose it, we lose it not just from a 1 minute time frame, but let's say 30 minutes or so will be sufficient. Then we'll say, okay, that we have more good news than bad for today. Let's look at the indices really quickly here. The SPY bouncing off 550. I think 555 could be a target today. I mean, you see the 30 minutes here moving from way oversold conditions. To fix that a little bit, under the right circumstances with VIX under 20, we can go back to 555. Question is, what comes after that? If we stall at 555, do we head down again after fixing the oversold? Or do we continue to move higher and recover in a V shape? Or at least semi-V shape? Well, the recovery depends on the two pieces of data that we got left. The stall at here or 555, regardless of where it happens, that would be a bad sign that the market doesn't have it. I think it's going to happen because Apple and NVIDIA continue to experience weakness. So that's the SPY for you. Let's zoom in a little more, or let's do the hourly. The hourly is oversold, kind of trying to get out of this wedge pattern, so we'll give it the benefit of the doubt. I think, again, 55 will be, for me, the important test. If you can climb above, okay, then I'll trust whatever rebound that's going on. You're still staying below 55? I can't trust it, really. And the same goes for the Qs. If we look at the 30 here, again, trying to recover. So we'll give it the benefit of the doubt. Usually I wouldn't initiate shorts right here. I would wait till we see a failure, point of failure like here and here. Then you look at the hourly. Let's look at the hourly here. Oversold, still give it the benefit of the doubt that it fixes a little bit of this oversold conditions here. But we'll look at the NQ numbers because the Qs here is not giving us. I would say the number would be 465 as the validation that the rebound has legs. But I would stick with the futures instead because those numbers are more accurate. In any case, let's look at the daily chart though. If you're playing October or November puts, do you really care about what we're looking at in the hourly charts or the 30 minutes chart? Of course not. You don't care. You can get a rebound all the way to the 20 days moving average in the Qs at 468. It wouldn't really matter to you because it would be something like this. Initial shock, come back to the 20, and then come back down again. So you don't really care about the oversold conditions in the shorter time frames. But again, we have a bearish break. There's no doubt about it. Let's see how much retracement can we do today. It is an important session today to establish the narrative. Will what we got yesterday become predominant all the way to the rest of the short trading week? Or will the buyers have another say? So right now, I think the buyers need to step in. Anybody who's pumping right now needs to step in and begin to buy at this point. If they don't, then we'll see a failure. And again, VIX probably rebounding off 20, so that's what's causing the market right now to pull back. He loses 20, I think the market will feel more comfortable. I think the buyers will show up if 20 is lost. I think that's what they're waiting for right now. If you look at the IWM, this is also a good sign for the market, by the way. The IWM has recovered already. It's trading positive about a little half a percentage point, over half a percentage point. So that's good news for the market that it's holding this support. Here's the problem for the IWM, though. Suppose it rebounds or zigzags here for a little bit. Wouldn't that be a topping head and shoulder? So it is imperative for the market to reverse yesterday's action as soon as possible and trade above these breakdown candles. Easier said than done. Easier for the IWM. Not so easy for the Qs. You need a lot here. You need NVIDIA to come back with aggression. Not so easy for the SMH. I mean, a long way. I mean, we see breakdown candles like this. They're really hard to beat. I mean, you see one here, you see one here, you see one here, where you can find somewhat of a recovery, if you guys can see that here. But then sooner than later, you fail. So again, I would give the market the benefit of the doubt, but today's the day where the buyers need to put up or shut up. Then we look at Bitcoin really quickly was weaker overnight, finding some footing above 56,500 right now. So until it closes below, I'm not comfortable to say that I'm going to go short Bitcoin at this point. Now, looking at the individual components, we just talked about Apple, so we'll look at it again. It lost the 20, and I think that at some point we're going to head down to the lower Bollinger Bands, so 215 will be in play. It's a shame, really. We had a good trade on it, but it expired last week. If we just had it for one more week, it would have played out. In case, I would not initiate any puts on Apple after it reaches 215. It'd probably be too oversold. At this point, you can still play that. Your cut loss would be the 20 days moving average, closing above, would assume that Apple is reversing. But again, it is one of the weakest charts I'm seeing today. It needs to recover. It needs to trade in the green before we see any confirmation of recovery. It ain't just the VIX closing below 20. I need to see Apple also beginning to recover, because Apple is the one that the asset managers, and I just talked to some of them, is the one that they're reducing position again. So I think that they've already reduced positioning in others, but let's say that when it comes to Microsoft, for example, they're not reducing right now. They still like Microsoft as an asset to hold. They don't think it's problematic as much as Apple, but they think that Apple is a problem. I think both of them are. I mean, this is a massive head and shoulder pattern that we're seeing right here. But for the intraday right now, so long as Microsoft is recovering, you got Google also did a little bit of recovery. You got Meta doing a little bit of recovery. Let's see if that's going to hold or not. But the drags, let's look at Amazon, by the way. Amazon also trying to recover a little bit, but it's It's really Apple that's dragging the market today. See, it's just showing weakness as the others continue to recover. I mean, even NVIDIA already recovered here a little bit, found some buyers. Of course, we all know what level we have to look for, as we discussed in the morning brief, must recover and hold before we say, okay, we're done with the puts, and maybe it's worth playing some calls. We got to trade above and close above 110.90. Let's call it 111. And the reason here, look at the hourly, it is oversold. Okay, it is oversold. One of the most oversold hourlies that we've seen this year. If it closes above 110.90, I would say, okay, folks, the risk is now has shifted to the upside in NVIDIA. And you got to close your puts, shift to the calls. But right now, we'll just assume that it's an oversold rebound with no validation yet. Any case, let's segue to your questions, folks, here. I'm sorry, it took a little too long here to go over the notes. Thank you, everybody, for joining, and let's begin here with the VIX catching up to the VIX futures from the BAMA. VIX futures, if you go longer expiration dates, if we look at the futures here, you will see some of them trading higher. So let's go to November, for example. And that one is trading lower today. Let's see if October is trading in the VIX. Let's see if what October, because October is the one that's a little down. So most of them are down right now, cooling off. So I wouldn't see a huge anomaly. But the VIX that we have right now, the current contract that we're looking at and what's more relevant to the market, is telling us that a lot of what happened yesterday is cooling off a little bit. Is it cooling off enough, though? We got to see it closing below 20 to have a confirmation. Mav, per video last night, I remember public storage was big, Tommy T, until people could not pay that as the economy got worse. Don't know if you want to go over it now, but your thoughts on public storage. Yeah, I mean, you rent a storage unit and you're paying more. I mean, you're paying almost what used to be like a studio apartment rent back in the day. So it is insane. But we have, again, a lot of folks moving and a lot of homeless people. So you got to need some access to storage. Right now, this stock, I mean, we talked about this guy, I think last year. It is part of the REITs, though. It is part of what pays dividend. And that's what's been appreciating as of late. So it pays about 3.5% dividend. And again, these names will continue to appreciate. I think I'd be careful with that dividend date right here, September 3rd, 13, Friday, September 13. And I'd be careful with the data that we get tomorrow and the jobs report. If they come out pretty good, I think that we see a rotation back into the big caps. And I think that we see money coming out of these guys as the managers begin to rotate. So I wouldn't say that it's a good entry right now for PSA. But I think if it drops, and you should hope that it's going to drop, these kind of businesses do pretty good, by the way, in a recession, right? As it did here in 2009. So if it drops, I think we should wait for a drop. I think I'll pick it up later on because it is one of the highest quality REITs. Okay. Hey, man, I have a feel that the SPY will test 570 plus, new all-time high before the flush. What do you think? SPY 570. Well, we gotta. I don't think we're gonna do 570 right now. I think that September is a tough month, and we rolled over before closing above the highs. And you see the MACD here in the daily rolling over. I would say that right now we'll be lucky. Okay, if we can recover above 555 or go to anywhere above 555. If I see that and the data comes out differently, then we'll talk about it. But right now, the odds for more downside to come, certainly much, much better than the odds for more upside to come. Because until you recover 555, which is in or around half of the body of the breakdown candle, so far this is a dead cat bounce. I see the momentum indicators rolling over, so I wouldn't say 570. I know a lot of folks on Twitter and all of that, they just shoot out some numbers. Or we'll do 580 before we go down. We'll do 600 before we go down. But again, I'm looking at the waves. That's what really matters to me. And the waves here, if we clean up the chart, I mean, you see the corrections, right? Correction. That doesn't look like a correction where we're going to continue and extend the wave. It ain't decisive yet. I'm enlarging it for you to see. but it looks to me that it's heading down. It's going to frizzle out and head down. If that is the case, I don't think we'll do 570. I think we're going to go back to the lows here. But again, I'm taking one step at a time. And because we are pretty much in tune with the data, that's what the Fed wanted us to be. That's the kind of market the Fed wants, which is a market that is so in tune to the data, overreacting to every piece of data based on policy expectations. So we have to be reasonable. We talk about what's coming in the services PMI and the jobs report. Okay, let's talk here. Hey, Mav, can you talk about the repercussions these indicators data can have on the USO and the XRM? I'm confused that I need to do something about my out-of-the-money contract soon. Unfortunately, oil, it got some good news today from OPEC. But again, we've broken the trend line here. We couldn't really break above. Sure, we're oversold in the USO. And I think that depending on the services PMI and the jobs report, if they come out hot, we will see a recovery in USO. I would not guarantee that it's going to go back to 80. That becomes way far-fetched. But I can see a recovery all the way to 74, 75 from USO, depending if we have hotter data or not. Because oil right now is afraid about a recession. And today we got recession news. Yesterday we got recession news. That's what upsetting to oil. But I think that the data tomorrow, the services PMI, could be in favor of oil. And again, you have to ask the question, do we think services is weakening significantly? If that is the case, then why is NVIDIA still making a ton of money? Why is Microsoft still putting in a ton of cash? Why is a lot of the other services companies still doing okay? I think that the services PMI will change a little bit of the narrative that we got today and yesterday. And that could be good for oil as a rebound. What do you use to short BTC, Mark? MicroStrategy is one of my favorite, but I like to use a short in MicroStrategy. So I shorted before around here. We covered it already, but if I'm going to use a short, it's probably going to be MicroStrategy because it is a pure Bitcoin play at this point. If I'm just trading, if I'm not really shorting, I'll probably go with Coinbase. I find these options to be really lucrative. Now it's way outside of the bands. I think the opportunity right now for Coinbase to rebound a little bit. But if it breaks this number 160.66, I think I'll take a short on Coinbase. And of course, you have the others. You have BITO. That's the Bitcoin ETF. You can short this guy. You can buy the inverse of this guy, which is BD. It goes higher when Bitcoin goes down. So you have multiple strategies here to use, but usually a short MicroStrategy, trade Coinbase. And then once in a while, I'll do these guys. If I see sustainable downside for Bitcoin, I'll probably buy some BD, rent it for a little bit, and then dump it. All of these are for rent, not for buy. Okay, also, when you look at companies with dividends, do you look at the yield or the year-on-year dividend growth? Is high dividend growth rate a red flag? Yes, because I can show you, for example, the worst kind of REITs. So if you look at medical properties, for example, that's not one of the highest quality ones, and it pays a pretty decent dividend here of about 7%, but that's under question. There's a reason why they pay higher dividend, because there's a problem with the company. I mean, you look at J&K, junk bonds. Those are paying high dividend in junk bonds, right? 6.5%, but there is a catch. These are the weakest companies that they could go bust at any time we have a recession scare like we've seen. I mean, J&K got hammered yesterday. By the way, the fact that J&K is moving back up is also part of good news for the market, that at least it is trying to recover right now. But yes, I would look at high quality dividend. And this is why I floated the DVI. It's not the DVI, but let's look at it here. Because not all of them are created equal. So if you look at dividend, the Schwab Dividend Equity ETF is okay. It's reliable. It's been there for a long time. But if we look at high dividend ETFs, the DVY is the one that I like, right? The VYM is okay. But there are ones that do, like the SPYD, for example, which we're going to look at in a second here. But let's do this guy, DVY. That's the one that I like because it has the better quality assets. Again, I love the individual picking, but if you want to pick one of the ETFs, this one here is of the highest quality by 3.5% dividend. The problem with, let's say, SPYD, this is high dividend. So it pays higher dividend, but it has, so it's about 4%, but it has lower quality assets. It has a lot of the oil names that pay a lot of dividend, and it's working out for now. But this one is not as reliable as, let's say, the previous one here, DVY, with higher quality assets. And of course, if you want to look at the Vanguard, usually they're pretty good in structuring their ETFs. This one is a little lagging here, so again, I would go with DVY as my choice. By the way, this one here, the Schwab, let's see how much does that pay. Okay, close enough. So it doesn't matter whether you like the Schwab one or you like the the DVY, either one of them. Okay, let's do good time to enter NDX puts for November or December. Well, if you're entering November or December, you don't really care about the timing from an intraday frame, because you're already broken below the 20 days moving average. You plug in your 50, you're already below. Got a confirmation right here in the MACD. Confirmation in the Vortex. If this rebound doesn't really stick, then I think we're heading back all the way to the lower Bollinger Bands. And these drops can be really steep. So if you're going to enter any October, November puts, you aim for the target right here. There are two ways you can aim at it. So let's say that the target here is 18,300, sake of argument. You can buy that contract as a naked put. It's a little riskier than opening, let's say, a spread where you buy the 18,700 and then you sell the 18,300. That's more of a conservative strategy, but safer. So it depends on which one you like. You have confirmation for that kind of strategy. But you have to identify your cut loss, which is where do we know that the drop that we got yesterday is just a one-day wonder. And how higher we go from this point? Well, you have the 50. So at least you have some parameters here that you can use to guide your trade. But if you're doing a mistake, by the way, if you're looking at this, if you're looking at something like the 5 minutes, or you're looking at something like the 1 minute, or you're looking at even, let's say, the 30 minute, and you're saying, maybe it's going to recover a little bit, bad entry and all of that, because this is not relevant to you for October, November. For all you know, by the way, a recovery all the way to the zero line in the MACD could just take the NDX back to the 19,100 level, which is not a recovery yet. So again, so long as you know how to manage the trade now, you can enter it. It's okay. You can enter it so long as you know how to manage. If you're nervous about the short term here, you can afford to wait a little bit until we take the lows. Once we take the lows of today, you enter the trade, because that's going to be your proof that today was a dead cat bounce. We'll keep it at the Qs here, 464. Okay, good. Moving a little higher. What's going on with NVIDIA? We're catching a bit. Good. What about Apple? Catching a little bit of a bit. So Microsoft, I'm assuming it's catching. So a lot of them now catching a bit. Let's see if the VIX took 20. Yep, it took 20. So now folks are going to feel a little more comfortable. Of course, I'd love to see a 30 minutes closing below the 20. I'd love to see 15 at least. Something significant to say. Yesterday was a lot of hedging, and now we're taking some of that off. And that's going to give comfort for the buyers to step back in. So we'll keep it here, folks, at the 5 minutes. And let's go here. Thank you for putting the... thank you so much. Appreciate it, Freeman. Good time to get DLTR calls for December. So you're playing a contrarian trade here. The LTR got hammered yesterday, or today in the morning. It wasn't a surprise, really, because of Dollar General. But the puts were so expensive. I think that the drop that we got right here would get you maybe like 30% worth of profits. Nothing much. So it was kind of expected. Now, do we buy December? I think December is way too far. Unless you believe in the company, which the company gave you no reason to believe in it today. This is kind of annoying here because I can't see what's going on, but let's play with it a little bit. There we go. It's outside of lower Bollinger Bands. To me, this is a trade more than it is Let's buy DLTR calls to December. It's something that you want to play for the week, something you want to play September 20 the most. And you're aiming for a retracement of some sort here, the 70 line, 72. That's about it. You're not really playing, oh, let's go back to the 80 or 90 and buy December calls. I would not support that. I think that the business is damaged, and I don't think that it even has any dividend component. So I'd avoid going with the December calls. It costs you a lot of money. Just stick to lotto tickets when it comes to rebound plays like this. Let's do I like individual names too, Mark. Yep, I think the individual names. All you get to do is just go to the map right here, and then look at the dividend. Sometimes this is not accurate, by the way, but close enough. And look at these dividend names one by one. I mean, the financials, the managers love those. I don't. I find the insurance companies as reliable when it comes to dividend, like MetLife, for example. Those life insurance companies will be okay. I mean, look at MetLife, by the way. It just keeps going higher. So it was a great buying opportunity right here. I also look at something like PRU, company that I used to work for at some point. That's also a dividend-paying stock that is of high quality. So the insurance names are good in financials. It pays about 4.3%. So these are okay to hold for now. But I do like the big pharma names, exception Pfizer. That has a lot to do. Recently, I bought Bristol Myers. So Bristol Myers could be an option. I mean, it's looking pretty good here. If we do the weekly chart, I think you guys can see it, right? This could be a good opportunity. If it plays out, and I'm crossing my fingers that it will play out, because we have a dividend of about 5% here. Another trash name that we talked about is Newell. I mean, why not? Maybe this is the time for Newell to shine and begin to gather some steam. It pays a high dividend. It pays about 3.88, and showing a positive pattern here. Confirmation, of course, if we close above 9, but right now we're trading at 7.49. So I'll allocate a little bit of money here just as a wild shot. If it plays, it plays. If not, not. But it's worth trying. So I like these guys. I like the dividend-paying names in the medical devices. So Abbott, been a little tough to hold, but MDT been beautiful. In the industrials, of course, the defense contractors, I think those of higher quality. Not sure about these guys right here, the electricity stuff and the shipping stuff, UPS. That's just too cyclical to me. I like the garbage stuff. So waste management, RSG, these are pretty good. They pay a lower dividend, but they're reliable. As far as the utilities, the problem with the utilities, I like Duke and Dominion. Those are my two favorite. But when it comes to the XLU, you can buy the ETF and just enjoy the dividend from the ETF if you don't want to pick. The only problem I have with the ETF is the weight of next era, which could be problematic. As far as real estate, the highest quality names for me, American Tower, PLD, PSA, we just talked about that. So these are the three guys that I would go with real estate. As far as metals, you got to be really careful here because metals are really cyclical. So we can't go with any of the metals here, the chemicals. I would go with the gold miners, for example, if you look at the full map. Some of the gold miners are okay to hold, so I have WPM, but avoid the really high dividend because there's a catch when it comes to those. So if you can get 1%, 1.5%, that's pretty good for any gold miner. Energy, too cyclical. We have to be careful. Highest quality name would be Exxon, but again, Exxon would not be spared if oil prices go down. Now, when it comes to these guys right here, those are pretty good. And I do like the food components like Conagra. Hormel was pretty good today. SGM is coming back. Kraft Heinz, General Mills, all are pretty good. The tobacco names are reliable. The PepsiCo, Coca-Cola are a little too hot right now. Even Philip Morris is too hot. So if they pull back, I would definitely consider buying them. Procter & Gamble has always been a source of safety. Folks just trade it as a sort of source of safety. So if it pulls back, any pullback in these names for me will be an opportunity to buy. Now, when we look at this sector right here, McDonald's, one of the reliable ones in times like this. I'd avoid the automobiles. I'd avoid anything cyclical here. The shipping names, they pay good dividend, but there's a catch. These guys, Home Depot, Lowe's, I'd wait till the recession is already in before we do that. I added Magna, which pays a high dividend, but again, too cyclical with a lot of risk. So I'd stick to McDonald's in this sector here. Then the telecoms, you pick one of these two, AT&T, I like Verizon, and that's it. So I do like picking individual names. And by the way, even in tech, I mean, IBM been outperforming, Cisco been outperforming. So if we plug in just IBM, notice that this guy, I mean, nothing happened to IBM yesterday. Just a little tick and it keeps going higher. So when you see a pullback in this guy, you probably want to buy it. You can ride the wave right now, and you can have a strategy of stop loss. That way, if it goes under a certain price, probably the price that you bought it at, no harm done. So you can, because sometimes we wait for pullbacks when we see stuff like this, but they just keep going and going and going. Because maybe they're overbought in the daily, not so much in the weekly, not so much on the monthly perhaps. So you could have more momentum to come. So a strategy of buying and then setting a stop loss is pretty good with these guys right here. In any case, we went over a lot of dividend names here. Let's go back to the market activities here, folks. We begin with the VIX. What's happening with the VIX? 5 minutes, finding a little bit of footing. So let's look at the Qs here. Yep, really sensitive to the VIX. The SPY even more sensitive to the VIX. It's imperative that the buyers don't give up here. You gotta keep going. You gotta keep going. And you look at the NQs. You gotta score the second challenge and close above. Otherwise, we got a problem. NVIDIA, you gotta close above 110.90. So, I mean, the VIX will have oversold conditions in the intraday charts and try to recover. But so long as it keeps going down in the main chart, which is the hourly here, which is not oversold, so long as it keeps going down and drag down here, good news for the market. Okay, let's do here, Maverick. I'm brainstorming some bazooka trades. I'm unsure what level and what chart to lose before initiating, or to choose before initiating. Well, it's probably going to be either the SPX or the NDX, the Qs, or even NVIDIA. But look, usually these bazooka trades happen when we see, for example, had this one right here with the initial shock. Had this one right here went down, failure to recover, and came back down again, that's a bazooka trade. Okay, because you want to look at points of failure to recover and resumption of the selling. So for now, if we do something like this, down, failure to recover, we come back down, that's the bazooka trade right here. Because you'll see more selling, aggressive selling showing up. So these are the kind of stuff that I look for. And so far this year, we didn't get any. I mean, we had one right here, which you could have played, but besides that, there were none. I mean, even here in April, none. You have to go back to last year when we got one, which is go down, recovery, and then down again. So you need to look for that. And usually the best ones, not in a wide range like this. That's too wide, right? Usually in something like we have right now. If we have a failure and we come down, oh, you got to do it, because we'll see more sellers showing up. It's more of a psychological phenomenon than a technical phenomenon. It's initial shock. The buyers are already in the game. They say, okay, wait, give it a little bit of time. The buyers will show up. Just a little bit of a panic. I don't need to sell. The shorts cover a little bit, and then they see that there are no buyers showing up. They say, wait a minute, what did we cover here? Let's short again. And then folks who were down big here, and they see a little bit of a recovery, and they say, you know what, maybe it's better to exit at a better price right here. And that kind of psychology accumulates and creates the energy all the way to the downside. So that's when you want to do a bazooka trade. Anyhow, and that, by the way, answers Neil's question right here. So if you see failure, you got to do it. Yusef, I don't have any questions. Car market is cooling off a little bit last 2 weeks. Been okay, not the greatest. However, it is still somewhat hot for fully loaded units because the pricing is going down, right? I'm assuming the pricing went down. But again, it also adds to the evidence that we have sectors in the economy that are still holding and reheating. So the market right now overreacts to the bad news that we got yesterday, but it's going to be faced with, let's say, better performing sectors. And soon enough, when we do the rate cuts, we're going to be faced with a resumption of inflation. And it's a long conversation, long time from now, but that's when real chaos begins. Jeff Colombo, what about Bumble and Uber trades? Bumble, let's look at this one here. Daily chart at the 20, we got rejection, now we're above the 20, so it kind of takes the trade off the table, but I spend, I guess, 15 cents a piece, and I have all the way till September, so It's a small trade. It's not any biggie here. So I'll just keep it as it is. If it goes down, then I'll probably short Bumble at that point at $6. Short. So that's my management strategy for Bumble. Now, Uber showing a little bit of sign of weakness yesterday, but didn't lose the 20. So today you want to see if it closes above 73.66, then the trade should be taken off. If we close below the 20, you should stick with it because we have more downside to come. It's going to play out before the expiration. By the way, same goes for Dash, similar looking charts. The thing for Dash here, the cut loss will be 130, but right now, if you go to 130.58, it's going to be already too late. So the 20 days moving average for me is important. If we trade above, I'd be nervous about the trade. Trading below, keep it as it is. It might drag all the way down to 120 as we head closer to the September 20 expiration. Do you think DKS can benefit from the rotation theme? They did report earnings today, and the reaction is not good. So Dick's down about 6.5, and Dick's is more cyclical. So you're buying sports and outdoor stuff. The school season is always good, but that's always priced in. I don't think this is a necessary kind of purchase where you can find resiliency in a store like this. I don't see it. I don't see that. I see Dick's is probably one of the retailers that will want to start to think about shorting at this point, not buying. GDX entered some 920 and 1018 calls. Do you see a recovery in the coming week? Is it a good time to add some GLD? So we go back to the conversation of the dollar. And right now the dollar is down. That's good for gold. The problem is you have the services ISM coming out tomorrow. What if that comes out hot though? You got to remember that the momentum in the dollar is still oversold and recovering. That's the status. So we could see the services ISM moving us back up in the dollar. If that is the case, then you're going to see gold actually going down. So I'd be a little more careful with gold. It ain't out of the woods. You got to let the macro data get out of the way before we do anything about it. And I would say that gold would thrive if we see the ISM out of the way, if we see the job report out of the way, and then we see the Fed cutting rates, then I think that gold will begin to shine. So you can wait on buying gold or GLD until next week, because I cannot guarantee that the services ISM will come out weak. There's a chance it could come out actually hot, recover the dollar, and push gold back down. And the same goes for the GDX. And by the way, you have 920 and you have 1018 calls. I would go with the 1018. I would let go. Just give it a minute here, folks. Okay, we're back. So I would go with the October ones. September, I think it might not work out. If the dollar firms up a little more, I don't think it's going to work out 920. So we stick to the 1018. I think that's a better play. And I would do the GLD calls, by the way, not GDX. GDX is more sensitive. USO, would you buy some in the money calls? I would buy some with the assumption only if you believe, because it is oversold. So we're expecting a rebound, but only if you believe that the data coming out tomorrow will be hot. The services PMI and the jobs report will not be as bad as people anticipate. If you agree with that, then I would say yes. Buying USO, not to 80. 80's out of the picture right now. We got pretty good hope here that we can make it, but 80's out of the picture now. I would say I would aim for something as 74 as the max that I would do right now. If you want to do in the money, that's okay too. But understand that you don't want to overcommit to oil, because between now and the cuts, we could see more recession news. If these data points come out ugly, oil will continue to go down. Oil will thrive after the rate cuts, not before. Okay, let's do here Pinduoduo. Can you check on the flows whether it is expected to bounce to 100 or not? So PDD, let's see if the rebound slowed down a little bit. Yeah, 98. Stopped at 98. And that's a bearish engulfing candle. Ooh. Yeah, we got to be careful here. So let's look at what they're buying. PDD. Nothing is showing up right now. That's weird. No options for Pinduoduo. Nothing is showing up right here. I would say, look, if there was no close above 98 today, and we closed like this with a bearish engulfing, I'd be careful. I'd get out of Pinduoduo. Stick to Baba. That's okay. That's better than Pinduoduo. But 98 is important. You got to close above 98 before you get 100. I hedged my puts GLD with, I hedged my GLD with puts in the SLV. Thank you for the suggestion. Stake yesterday. Yep, it's a really good strategy. If you have gold, if you have GLD, when you see the dollar going up, you just buy puts in SLV. It'll give you a little bit of money, so you don't feel bad about the drop in your gold holdings. So at least you're making something to make up for whatever loss that you have in paper. Ryan, hey Maverick, here's a real estate update. In Southern California, for me, things are slow. But I'm talking to people regarding getting listings. Actually, will make some phone calls today. Okay, that's good. Yesterday, I talked to a realtor that's a good friend of mine in Las Vegas, your neck of the woods. She said that things are extremely slow and buying and selling just thought you should know. Yeah, I mean, pending home sales, I mean, worse than 2020. So this information is pretty much reflecting the data that we got. The problem that we have right now with real estate, at least in Vegas, the prices are way too high. So but the thing is with Las Vegas versus California, there are always Californians moving to Vegas, and they can afford to buy. So those are the only buyers left. But for the rest of the folks here, everything is out of reach. The prices are way too high. Now in California, I think it's going to be more challenging because, I mean, it's even more expensive. Who's going to move there to buy properties at this point? I think California will be more tough. Vegas could be a much better situation because even if you get somewhat of a recession, you'll see more Californians moving out of state into Nevada. So I think that the Las Vegas housing market could see an initial drop, but then it's going to heat up again. So I'm waiting for that drop to buy properties because I think it's going to be a really good investment. In any case, Mav, how do you survive in the garage with the Vegas heat? I have air conditioning, baby, even though it's kind of old here. I did a new unit downstairs and it works phenomenal. It doesn't cost a lot of money. It's actually really efficient. The older ones, they cost a ton of energy. Anyways, how do we manage the butterfly trades that are in place right now? Google, Microsoft, Meta. You got to remember, the butterflies that we've done, we want some exposure to the downside, but we don't want to overcommit. So the butterfly is still good. If you think that we have just a dead cat bounce right now, we're going to head down for the September seasonality, the data, the Fed cut, whatever reason it is. And look at the Bollinger Bands, by the way, in the Qs. That's ugly. If you think that we have more downside to come, then you're not bothered about these rebounds. The butterfly would actually give you exposure to the downside at a cheaper price. If the butterflies play out and they become profitable, we'll take them off and we'll do more aggressive, let's say, naked puts with December or November expiration. But for me, the butterflies are sort of the validation process. If they play out, then I have more where that came from. If they struggle and they're not playing out, then I would say, okay, I don't want to overcommit and buy December or November puts because I got the butterflies and they're not working. So that's the thinking process behind them. Now, how do we manage them? I would say you need to see a little more declines before we begin the book. And we can close the entire butterfly. I mean, Google was okay today. Now it kind of faded away. So if Google continues to make lows, and let's see we don't have Apple, but Apple is important. And then NVIDIA, all weakening right now as we speak. So the Qs is taking a little bit of a breather here. VIX probably coming back up to 20. So the challenge is still here. So I want to keep those butterflies in. The way I manage them is probably just close the entire butterfly. Once we get closer or a touch above the body of the butterfly. And then I'm going to rotate naked puts or let's say longer spreads inputs. Farouk, when you short a stock, we pay interest in the stock or dividend in such case. Do we pay interest? Well, if you're shorting the The stack, you have to pay interest because you're taking a loan, pretty much. Should we short symbols with dividends? You're not going to pay a dividend, but you're going to pay the interest because it is a loan that you're taking. How would you look at such a scenario? I never really worried about the dividends. I don't think I've shorted anything with the high dividend recently, so maybe not the right guy to ask here. I usually short the growthier and momentum names when they break. But shorting, yes, you're going to pay interest. I'm still paying interest in some of my shorts from 21 that I haven't closed yet. So at some point, this is why we say that when you short a bubble, for example, why do the shorts win at the end of the day? Because they short and they have to book their profits. Otherwise, they're stuck with an asset that could rebound higher or paying interest. So you're always going to book your profits if you have a short trade. If you're long and you're emotionally attached to the bubble, then you're not going to book your profits until a little too late. In any case, the short answer, yes, you pay interest. The dividend, I'm not sure. I haven't shorted anything with dividend recently, but I think it's the interest is what you got to worry about. What the heck is going on with Tesla? High-tech craters and Tesla explodes higher. You got the 920-200 puts. Go in a hold because it is worth very little. But any advice? Okay, so you got the 200 puts for 920. We got to manage those. Now the VIX is moving higher, so it is impacting a little bit of the tech trade here. But it is an important point to bring out that Tesla is not the one suffering. It's the Apples, it's the Nvidias. So what is the message? If we want to decode the message from yesterday, it's a lot of hedging by the managers on the overbought and over-owned positions. That's the Apples, the Nvidias. And usually that kind of hedging process lasts for a little bit and then it subsides. And the fact that it's not impacting other names in the market is noteworthy. That we could see a possibility of at least an attempt for a recovery if the hedging activities subside. The problem, though, that could get out of hand is when the hedging happens, the managers begin to buy puts or begin to liquidate some of their positioning. And the market maker, of course, sells more of their position as they see more buying of puts. The problem with that process is as the hedging begin to kick in, it might trigger stop loss orders for folks who are holding NVIDIA or bought NVIDIA recently. And that could exacerbate the selling. And then we hit more sell orders and more stop loss orders and just gets out of hand. That's a possibility. And this is why we watch the VIX, because if they continue to buy these puts, they could actually put it in a position where we see that kind of inverse gamma phenomenon. But right now, the fact that Tesla is doing better, that tells us that for now, we should take it as it is a hedging activity in the beginning of the month. Whether it's going to have legs or not depends on the data we're going to get tomorrow and Friday, most importantly. Now, Tesla, what do we do with this guy? Plug in my 200, my 50. You're now trading at 219. I think if you close above the 50, you got to take those 200 puts out of the equation because, I would even take them out right now because I have no validation to buy the 200. I mean, you're kind of betting on the 200 days moving average, which is in or around 200, which is not a good bet, by the way, because if it breaks above 50, you'll be probably at a bigger loss here. So I would say maybe you should close it and wait for the validation for the loss of the 200. That's the 200, excuse me. The 200 days moving average. And then you can play lower strikes. You can actually buy the 200 and sell 180. You can go with the 195, 185. You can go with the 190, just naked. So you'll have a lot of options. But right now, it's a battlefield. Tesla is still making up its mind. And Tesla is not being liquidated by the managers because the managers are not really overweight Tesla. Anyhow, I hope that answers the question here. Entered KRE 5752 puts. Debit on 826. You got 20% gains right now. What do you think? 5752 for the KRE. 57, and you got 52, which is pretty good. 52 is even below the 50, so I would say stick with it. I'm seeing a little bit of weakness here in the KRE. I'm worried about my trade, the 60 calls. So I might take that off the table if we have any money left here. I would take that off because this kind of reaction is negative. It might roll over, give us confirmation, so I would stick with that trade. Keep it. You close it if we take the wick from yesterday. And the wick is 58.07. Let's call it 58 even. If we trade above that, then you take it off. But right now, you're pretty good here. Okay, RTX LMT, would you bet on a retracement via puts? I wouldn't do that because there are always buyers. I mean, Raytheon got a little bit of a whack yesterday, but it came back again. So uh, I just think if you take a put in this guy, it's probably going to be really short term, as 118, 115 max. And then you'll see buyers showing up. LMT is the same thing. It just keeps going higher. So got dividend day, a little bit of a pullback, then higher it goes. So not the best short. Don't be seduced by a chart that went this high as good to short. I mean, the example is, of course, we always bring in GoDaddy. You could have shorted any time here, thinking that it went way too high, but it just kept going and going until this point that we have right now, when we finally see it breaking down. Usually when you want to enter shorts on anything, you want to look at things that are already breaking down and you ride that momentum. You don't want to guesstimate when the hot momentum will stop or it got too hot so it must drop at this point. That's a fool's errand in trading. You better ride the momentum that's already playing and already confirmed. Okay, let's do VIX 1 day, 9 day, 3 month, and others all equal out at one point during the month. What day is that in the month? Wednesdays? That's where the expiration is, right? Wednesdays, usually when we see VIX expiration. Now, if your question is you want to buy the VIX, I would hold my horses in this here because I want to see how 20 is going to react in the contract that we have right here, which is the short-term contract. If we close below 20, I would say not a good time to buy the VIX or VIX futures. So you have to be careful because we can go back to 17 and then we find stability in the VIX. So I would watch the battle of 20 right now. It's not finished yet. Okay, 5,000. Let's do here Zanskar. Any trades make sense? Calls for Robinhood. So if we look at Robinhood, it's not trading hand-to-hand with Bitcoin as it did before, but it is trading somewhat with, let me plug the IWM. We'll probably see some sort of alignment here, right? So you see a little bit of alignment with the IWM. So the problem is if we see the IWM going down and the market conditions begin to weaken as we see the sell-offs intensifying, then this is going to be a lower high and we'll probably see declines in Robinhood. So I would say that I'll probably lean short than long in Robinhood at this point. Because the kind of action that we got yesterday and perhaps today, that's going to shake off a lot of players out of the market. A lot of the folks who are buying options will be shaken off for a while because they lost a lot of money. And a lot of folks who are trading options in the retail side, or not just trading options, but also trading stocks, will be discouraged a little bit. They want to see signs of stability before they trade. And less trading, not good for Robinhood. 5,000 I want to risk on ANF at SMCI. How would you play? Based on your answer, short do pay interest. Is it safe to assume through options? No, I wouldn't do options if you want a short. If you think that something peaked and you think it's going to crash, you probably want a short. The interest depends on, you're going to see different interest for different assets, by the way. And for example, when ANF went down like this in Supermicro last week, we couldn't short it because the interest was way too high. So the interest will fluctuate. But as the Fed begins cutting rates, also the interest that you're paying on the shorts will also diminish. And it's usually not a big factor to me because it's a tiny bit of interest that you're paying. It's so long as you have an asset that's breaking down, you're good to go. So long as you have hedging strategy, which what I usually do is buying calls as we head closer to, let's say, events such as earnings or any big macro data. I would buy calls ahead of time just in case if it blasts higher, I have the options to exit the short at a certain price. So long as you understand all of that and you think that ANF is done here, we got the top and down we go, you're better off shorting because the put options, you have to time them right. You have not only to time them right, you have to get the strike right. So if you buy the 100 and you buy, let's say, November and it doesn't happen till December, and maybe by December it'll be down to 50 because we have a crash in December. But so you're bounded by the expiration date and your trade goes loser. So you're better off shorting if you think that something topped and it's ready to go down. And as far as SMCI, yeah, I think this guy is just Not looking good here, and we'll see more declines to come. I think that 269, 270 will be in the cards. So I would still think it's a good short at this point. And of course, if you want to put a stop loss on the trade, you're probably going to have it at my line here, 478.56, or the Fibonacci 474.73. So if you go above there, then probably the timing is wrong for the short. Or maybe you have call options before important events at that level. But right now, I think that both of them are good. And this one is already broken down. Already gave us confirmation that it's done. AVGO, chance of boosting the semis tomorrow. Could be. That's another card that we have to watch carefully today. But based on NVIDIA's earnings and all of that, I think that they're going to run into the same problem. It could actually freak out the chips if AVGO goes down. It's a big weight. It's a big weight in a lot of ETFs. So yeah, it is an important event. I cannot really guesstimate how the reaction would be because there was a lot of psychology in it. For example, if the Qs managed to close, let's see here. If it managed to close positive today, right now it's having a little bit of a hard time. But if it manages to close positive and the VIX goes below 20, the market psychology might be more generous toward the AVGO. That it might show a bad report, but we see a bit in AVGO. And it could cause a recovery in NVIDIA tomorrow. Again, without the report in my hand, I can't really say how we're going to react. But yes, AVGO, really important for tomorrow's session. Okay, folks, doesn't look like we have any more questions. Let's go to Discord, see if we have anything over there. If folks are posting anything here. Okay, we talked about the Bumble and Uber. Yes, we talked about those. I'm staying in Bumble because if it works out, I want to short the name. Uber looks good. It's below the cut loss. So if it goes above the cut loss, we'll take it out. Thoughts on NUE, please. So let's do this one here, NUE. This is, of course, for Nucor, I believe. Do we want to buy steel at this point? I don't think so. We had false head and shoulder here. One played out, the other one did not. But we have a loss of the trend line. So Nucor, no, that's not a good buy at this point. I think that with the recession, Nucor would probably be a short. With China weakness, everybody's waiting on this deal with Nippon and U.S. Steel. That could actually consolidate the industry even more and hurt Nucor. So I would look at Nucor as a short, not a buy. Let's do here. We have King Karoots. Hey, Mav, crybaby pussy here. Don't be ashamed, my friend. We're all crybaby pussies at some point. If you had to throw a Hail Mary and buy some puts this year on the Qs for a big payoff, what date, strike, strategy would you go with? I'm going to do it with you or without you. Please give me a hand. And I'm 100% certain I'm not the only one who wants to know. Yes. But before we talk about what time and what level, and we're looking at the charts right now, if you're going to take a long short on the Qs, so the first thing you're looking at, of course, is a trend line. So you need to see that we're breaking trend and we're kind of struggling with that trend. No confirmation yet. If we lose it, then we got a confirmation of the lower high. Okay, now I got a confirmation that I can play downside with certainty. And I have the wave here turning back bearish. What else do I need to see? I need to see the individual components. I need to see the story in NVIDIA frizzling out for real. I need to see that Apple is going down and not being treated as a source of safety anymore. Change in psychology. I need to see that the Microsofts and the Googles and the Metas are being liquidated too. And if that is the case, then yeah, I would take a short, probably hitting to the lows here where we can find support. And it will be for October or November. And if we take that out, I would upgrade the strikes. Let's say to the next support could be around 400 even. And we'll go with longer expiration date. So usually when I buy put options and shorting an asset, some folks usually would buy, let's say, June 2025 puts, and they'll go way out of the money. And by the time it goes to that number, they'll be lucky if they made 20%. If not, they're down. They could be down because of the concept of implied volatility. So the way I treat options in shorting stocks is step by step, one increment at a time, and then continue to roll if that works out. And this is why it takes us back to the conversation on ANF. If you want to short in the long term, you don't want to time it. You just take a short in the Qs. If you have a confirmation of the loss of the trend line this week, then a confirmation of the lower high, You take a short in the Qs or the NDX at that point, and you just stay home. You don't have to look at the chart every day. And if it continues to go down, timing doesn't matter for you, so long as it keeps going down. So I would look into shorting as an option here if you don't want to time the market. Let's do another one here. I'm a gardener. I'm holding RMD with Jan 250 covered calls and September 2200 puts. I bought RMD when you suggested. I'm happy with the results. Held mine after you sold yours. We didn't sell mine. I didn't sell RMD. We added to it, actually. You caught in the covered call. So I get it. Okay, so we have the 250 covered call. I didn't sell RMD. RMD was actually, we bought the dip in it. Because RMD was unfairly punished, I would say. And every time it dropped, we got a recovery. Every time it got a big drop, we got a recovery. Because it is a good stock. It is undervalued. Now you sold the 250 for January. It's not in the money yet. For all you know, we could get a pullback. So it's not a bad covered call at this point. And if it goes above 250, then you'd sell at 250. And if you like to buy more at that point, let's say it goes to 260, 270, and you feel like you missed out, you're going to sell at 250. Then you got to buy the 250 contract back and you sell something above, like the 260 or the 270. There are other strategies that we can talk about if we get to 250 really soon. And those strategies would be turning the trade into sort of a butterfly. But we can talk about that if we're above 250. But right now, I think that RMD is good, but it is overbought. Could get a pullback, and your covered calls will be fine. Okay, the yield curve is in the plus now, which is not a good sign, by the way. November monthly 400 in the Qs. What are we talking about here? The 400 puts for November for the Qs. The 400, see, now you're going way too far, right? And either you get that crash, indeed, or you're probably 9 out of 10 times that's going to be a loser, right? So it's one step at a time. It's now September is a little too soon. So now it's October, and since we've lost the 50 and we lost the 20, we have to look down at the next support. So we have here a reaction right here at 443. So that's going to be my first target. If we're done with that, we take the low here. Done with that, we take the low right here. So it's a step-by-step process, and keep rolling as you go. That's the way to make money in these kind of drops. But if you buy the 400 and then you get a drop all the way to 440, you'll feel pretty good because the 400 is going to appreciate. Then that guy rebounds and consolidates and eats away time and premium out of your contract. So just be aware of that. Okay, let's clean this up and get my numbers back. There we go. Here's the 5 minutes, not UCOR, and the Qs weakened significantly now. And the reason is probably the VIX is still above 20, no failure. So once it goes below 20, then the buyers will feel more emboldened. So this is the first breach. We need a second one. Will be the confirmation, and then I think the market will be able to rally. Because 20 is really important to lose. Okay, let's do here. We have, I said the 350 put in December as a lotto. Lotto is okay. Lotto, you're betting on something crazy to happen, and that's always a possibility. Can you commit on CRM or comment on CRM? I'm holding the 922.60 calls and a large loss. Also, Costco. Do you see more upside if the market recovers this week? So CRM, we've been talking about this for a while. I told you this. I'm not a fan of it. I think that when we got a failure with the bearish engulfing candle, you got to be careful. So I think right now you incurred a bit of damage here. You have your hope, though. I think we have Oracle coming out soon. I think we have some of these software names coming out soon. So your only hope here is a recovery in Salesforce to 255, 256, and then you close the trade at probably a smaller loss. But I think the 260 right now, it's pretty hard, and we should have cut it right here. In any case, Costco, can it go higher? Yes, it can. If we have a recovery, it could. It's one of the most reliable names. They're increasing the pricing. Still a dividend-paying name, even though it's a smaller dividend. But I will look at the momentum, and you got to trust the momentum. What does it look like? It looks like we're going to reverse here from bullish to bearish. Let's see, last time we did that right here, right? We got a decline in Costco. So the assumption is if this plays out, we get a decline in Costco. Here's another time when it played out, 2 times actually. So here we got a drop. Here we got a small drop. So not the best time to enter unless this one rebounds and continues to move higher. So you have to watch the momentum indicators because right now I would say it goes down more than it goes up. Okay, by November 400 and sell the October 400. Look, it looks to me like a lotto. So that's okay. You know, if you think that November is going to be the month where we see ugliness and not by October, then yeah, sure. So long as you understand it's a lotto. Hey, Mav, I did take your advice and did some lotto and bought puts on the inverse ETF expiring September 20 and September 27. Good for you. If it's working out, good for you. Let's look at the market here really quickly, folks, before we wrap the session up. 5 minutes chart still above the 20 for the VIX. Waiting for another failure. Could happen as the day progresses. If it does, I think that the Qs will find a footing and trade above the highs. And we might see a challenge to this range right here at the 465. And then we'll see what happens, because 465 is also an important number when it comes to the calls that folks are buying. 30 minutes in the Qs, still due to a recovery here. I might think that we're doing sort of an ABC. And again, you look at the NASDAQ futures, anytime you got a rebound, before you jump in and make assumptions, make sure that we're at least above the second challenge before you abandon the puts and you switch to the calls. Otherwise, a rebound right here, it's not good enough. Could be just a dead cat bounce and down we go. And here in the 30 minutes, by the way, in the futures, already fixed the oversold conditions. You look at the hourly, already fixing. So already did enough. The futures did enough. If it wants to go down, it can go down from this point on and make lower lows. So NASDAQ futures is really important to watch because that's a continuous contract. This guy gets the feedback later. So we'll watch it. And the VIX, you know what to watch for now, 20. That's what's relevant. And then NVIDIA. NVIDIA, let's look at the 5 minutes here. Cooled off a little bit. Give it the benefit of the doubt. This is all about the VIX. If the VIX below 20, I think that NVIDIA will make it and trade higher. Now we look at the rest of the market here, folks. Just so you understand, not all of the market is looking ugly. It's the stuff that is overbought, like Merck, and over-owned by the asset managers. When I see this kind of stuff, it tells me right away it's the asset managers who are doing the shuffling right here. They have huge weighting in Apple. They have huge weighting in NVIDIA and the big caps. That's why they're liquidating. And they're shifting some of these bets to the utilities, the staples, the dividend-paying names. But like I said, the managers, of course, when they do that kind of thing, they're not preparing for this week or for next week. They're preparing for Q1 2025. They think that the dividend-paying theme has more legs, and it's a better rotation too than staying in the big caps at this stage. Now, of course, you know what's going to happen tomorrow with the services PMI and then the jobs report. That could change the narrative in the short term and causes flows back to the big caps out of the dividend-paying names. If the two pieces of data come out hot and they push the bond yields higher. But again, at the end of the day, you have to trust the asset managers of what they're doing. And what they're doing right now, they say that whatever rebound we get in the big caps and outflows from dividends, that'll be an opportunity to buy dividends, opportunity to lighten up the big caps on the rebounds. That's what they're saying based on the shuffle that they've done so far in the month of September. Okay, folks, I don't think we have anything more here. So we're just going to wrap it up and we'll be back. We have one here. NQ got the daily bear cross, 8 MA over the 20 MA. Yes, but it's not the strongest signal. It's a really short-term signal. So it's more relevant for trading, not really for, let's say, monthly or bi-monthly expirations. when you're talking about trading options. But we do have the bearish confirmations already in. The bearish confirmations happened once the 50 days moving averages were lost in both the Qs and the NASDAQ futures. We're just going to wrap it up right here, folks. The VIX is the most important thing. If we see hedging continuing to show up and we're trading above 20, forget about it. If we take 20 out, back on track, rebound will continue to play. We're going to wrap it up right here, folks, but we'll be back in the chat session again in the closing hour if things develop one way or the other. So thank you for joining me here in this session, and we'll talk to you again soon. Good luck.